The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Yep, that's me, Ken Shreve. Happy Friday, everyone. Welcome to another edition of Breakout Investing on TFNN. 877-927-6648. That's the number to use if you want to give me a call, talk about this market. You can catch my show daily on TFNN from 3 to 4 Eastern. My show is also available as a podcast on iTunes, and there are some cool apps in the Apple App Store that you can download. You can easily download podcasts to your iPhone, so another good way to listen to the show. And maybe the best way to listen to the show is with your smartphone. Just type in tfnn.mobi in your smartphone browser, and it streams 24/7 at that URL. So if you're out and about, walking, taking a run, just plug those earbuds in, open your smartphone browser, type in tfnn.mobi, and you can listen to the stream that way as well. If you want to look at charts live right along with me, you can use Tiger TV on the homepage of tfnn.com to do that. Channel 1, the show is carried live. It is archived in Channel 13. Tiger TV is also viewable on your handheld device as well. All right, let's start off today taking a look at the NASDAQ Composite. Off its highs, looks like day one of a rally attempt. Kind of feeling like we're going to finish near session lows here. I'm not one to make big predictions in the market, but buying demand just not all that strong today as indices try to end the week with an up day. Again, that would be the first day of a rally attempt for the major averages. That means the very earliest we could see some sort of buy signal would be next week on Wednesday, day 4 of the rally attempt. That would come in the form of a big percentage gain in higher volume, 1.5%, 2%, maybe even more than that. The bigger the better. Get some good volume behind the buying, and we could see a buy signal. Right now, NASDAQ Composite up a little more than 12 points, 0.4% to 2907. Hit an intraday high of 2931. Pretty much trading right in the middle of its range today, maybe just slightly in the bottom half of its trading range today. Haven't checked on volume. Yesterday, Thursday, on the NASDAQ, we had 1.84 billion shares. We're tracking pretty close to that today, maybe just slightly higher, but looks like we'll come in pretty close to that 1.8 billion number. Volume on the New York Stock Exchange yesterday, 752 million, pretty much average on the New York Stock Exchange, and we are tracking pretty much at that level as well today. Let's take a look at the S&P 500, and we'll see what that index is doing here. S&P 500 also giving back some of its earlier gains, now trading in the bottom half of its range, pretty much right at its 200-day moving average. The 200-day line for the S&P is at 1381, and the S&P 500 right now is trading at 1381, up 4 points on the day, 0.3%, and the Dow Jones Industrial Average trading under its 200-day moving average, broke below the line on Wednesday with a big wave of selling, followed through to the downside yesterday. Tried to rally back today, but is just trading 3 points higher to 12,814. Inside the Dow, well, Disney not having a great day. Wasn't that long ago. Remember, Disney said it was going to acquire Lucasfilms. I think the price tag was right around that $4 billion area. Look what Disney does today. It is gaps down, comes all the way down to its 200-day moving average, touches it, and is now trading slightly above the 200-day line, but big sellers in Disney today. Stock is down 5.7% to $47.20. The company announced earnings last night. Earnings were up 15% to 68 cents a share, in line. Sales up 3% to $10.78 billion, but that was a little bit below the consensus estimate. Of course, Disney does, with the purchase of Lucasfilms, it does plan to revive the Star Wars franchise with a new trilogy that's going to be starting in 3 years. I think the first movie is due 2015, but a very, very rough day for Disney, weighing on the Dow, at least to some degree. Weak earnings from Disney. A lot of headlines out of Washington today. President Obama invited business and congressional leaders, both Democratic and Republican, to the White House next week for talks on how to avoid the fiscal cliff. And this is going to be very interesting. Obviously, the fiscal cliff is the focal point for the market right now. Not so much third quarter earnings season. We're pretty much near the end of earnings season, but we do have a lot of retail earnings reports next week. But we're probably better than 3/4 of the way through earnings season. I think the focal point between now and the end of the year is, maybe a few European headlines, but it will be the fiscal cliff. And judging by the market's recent price action, I think there are concerns by Wall Street that an agreement is not a slam dunk, and it's not going to be easy for Republicans and Democrats to agree. But President Obama is getting an early start here, I guess you could say, and again, inviting people to the White House next week for talks on how to avoid the fiscal cliff. Also, Petraeus at the CIA resigns today. Apparently an extramarital affair. That news broke within the past half hour, I think. So Mr. Petraeus over at the CIA has resigned due to an extramarital affair. Headed into today, the NASDAQ Composite about 9% off its recent high of 31.97. S&P 500 close to 7% off its recent high of 14.74. Obviously, we're in a market that is under distribution. It is nice to see the first day of a rally attempt for the market. We had a couple of feeble rally attempts. Looking at the NASDAQ Composite again in Tiger TV, here was the first day of a rally attempt back here in late October, I think it was. But as soon as that low got taken out earlier this week on Wednesday, it killed that rally attempt. So here we are, possibly day one of a rally attempt taking shape. Even if the NASDAQ closes 1 point higher today, it is the first day of a rally attempt. You don't want to pay too much attention to day two and day three, even if the gains are pretty solid, or even if they're, modest gains. And even if you get 3 days in a row of up days from the NASDAQ after today, you don't want to pay too much attention, because a lot of it's going to be short covering. So that's why you want to wait to day 4 or later of the rally attempt. At this point, if we do close higher today, that's day 1. Monday would be day 2. Tuesday would be day 3. Wednesday would be day 4. On Wednesday or later, if you get a big percentage gain and higher volume, that would be a signal to start wading back into the market with some long positions in stocks that you think have the potential to lead. So it's still early. Not all that impressive a performance by the market today. The fact that we're back trading in the bottom half of ranges after early strength. So in the end, just the first day of a rally attempt for the market, and the market still has a lot more work to do to prove that an uptrend could be right around the corner. But I'll tell you, if Washington can get this fiscal cliff, if the perception is that progress is being made, you can't rule out the fact that money could start coming in from the sidelines again, flowing out of the bond market and into riskier assets. It can't be ruled out. And again, if there is progress being made, which I think there's a chance it could happen, can't rule out some strength between now and the end of the year, at least a tradable rally. Sometimes tradable rallies where indices gain 5, 6, 7%, that can result, for a growth investor like myself, it can result in some pretty nice profit opportunities, even if they are kind of short-term opportunities. All right, 877-927-6648. This is an easy name to remember. I know this name. He calls the show every now and then. Fish in Riverview. How you doing, Fish?
Hey, Ken, good. How about yourself?
I'm doing all right. Good. TGIF.
You too, buddy. Hey, I have a quick question for you. I'm sorry I haven't been, I've been working, I haven't been listening today, but what I'm hearing is, we're in a downtrend, and so I'm in cash in my 401k at work, and the question is this a time to perhaps put some of that 401k money in a bond fund? And the specific bond fund option that I'm talking about is called Northern Trust Short Duration Government Bond.
And do you know what kind of yield you're getting on it? Or
I don't know that much about it yet. I didn't know if you might have heard of it. And then another one's called Northern Trust Tips Fund.
Yeah, I know. I follow the bond market, Fish, really just by kind of watching the TLT. In fact, I use ETFs more than actual bond, mutual funds. I don't really follow the bond mutual fund market that much. But, what you have with the TLT, the TLT is an ETF that tracks the long bond, the 20 plus year Treasury bond fund, it's called. And what you have is a technical breakout here, which is bullish. Is probably bullish for bond funds. But the issue I have with that strategy, I'm not saying it's not a bad idea, but this theme of money coming out of the bond market and into stocks, I still think holds a little bit of water. So I would say that if you want to put your money somewhere, the TLT may not be a bad play here, or okay. look at some other bond ETFs out there. Okay. The other option I would say in the ETF market, there are a lot of great ETFs out there that are giving you price performance plus pretty good yield. And if it's yield you're looking for, you get 3, 4, 5%, and some pretty strong performing ETFs as well. So you can earn a little money while the market's kind of sorting itself out.
Well, hey, Ken, the only reason I ask you about those two is because those are the only two I have available to me, because it's in my company. I can't do whatever I want. Now, can I ask you more of a general question? Would you do something like that? And if you could, would you do the long duration or the short duration government bond?
Well, I think the TLT. I don't know what the what the short duration bond ETF is. Okay. Yeah, I know that the TLT is the long. I'd have to do a little work on that, and I'd be happy to, But right now you do have the TLT, and I would imagine the same thing is true for the short end bond as well. That you're getting good relative price strength, and there are definitely buyers have been coming in recently.
Okay, I have another quick question if I can leave it with Al.
Sure, and Al can send it to me over our messaging. All right, thanks.
Thanks a lot, Ken. Have a great weekend. Thank you.
All right, you too, Fish. Take care. All right, Fish, getting the program off to a good start. Just questions on bonds. 877-927-6648. Breakout Investing on TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Ken Shreve with you, TGIF. About 35 minutes or so left to go in Friday's session. Yeah, just finishing up, just heard from Fish and Riverview asking about going into bonds here. And as I think about it, we talked about the TLT. This is an ETF that recently broke out, and if you're watching in Tiger TV, you can see it recently staged a technical breakout, holding on to its gains after yesterday's breakout. The issue with going long, a bond mutual fund or a bond ETF at this point is that this is still a market where it just, even though we're in a downtrend, if there is clarity out of Washington about this fiscal cliff, I mean, we could get money coming in from the sidelines at the drop of a hat, and all of a sudden that bond trade is not going to be looking very good because money, flows out of bonds and comes back into the stock market. So I can't fully embrace a sort of long position in bonds at this point, even though the TLT is breaking out. And that's because of the type of market that we're in. It's such a headline-driven market. It's so easy to get shaken in and out of positions. Now, if for the 401k at work, if you want to, they give you a couple of bond choices, and you just want to move a small bit of money in there for just a long-term, not worry about it type of trade, there's probably nothing wrong with that. But if you're looking for some short-term gains, I just can't fully embrace that. So Fish had a couple of other stocks he wanted to talk about. I'll tell you what, Fish, I will take a look at those over the weekend and shoot me an email, Ken Shreve at tfnn.com, and so I get your email address, and I'll give you my thoughts on those two stocks. All right, consumer sentiment data earlier today. The University of Michigan came out with its first reading on consumer confidence for the month of November. 84.9, better than expected. Economists were looking for a reading of 83. 84.9 was also above October's final reading of 82.6. So one thing the market is not suffering from is a lack of consumer confidence. Another good reading from the University of Michigan. Other news today, Priceline announces plans to buy recent new issue Kayak software for $1.8 billion. Let's check in on shares of Priceline today. This is another one of these big market leaders that I just got to tell you, I really don't envision it being a bona fide leader going forward. All stocks have their day in the sun. If you look at a weekly chart for Priceline, we'll do that in a second. You'll see it's made a pretty big price move, similar to an Apple, similar to an Intuitive Surgical, similar to a Baidu. A lot of these stocks just look to me like they're probably ready to take a rest for a little while. So shares of Priceline today down $1.88, 0.3% to $625.99. Let's just take a look at the weekly for Priceline. And you'll see this this big price run that we're talking about. And if you had to, looking at Priceline's weekly chart, this looks like a better short here than a long. Frankly, you can see this resistance that's going on at some key moving averages. So Priceline still looks like a troubled stock technically to me. Now, Kayak Software, big premium for Kayak. This is a company. They're a provider of online travel search services. They came public in July at $26 a share. You see a nice gap up for Kayak. They also reported earnings late Thursday as well, and they delivered another strong quarter of top-line growth. So Kayak up 27% today to $39.55. I believe the deal values Kayak at $40 a share. All right, 10-year note yield down to 1.61%. The 30-year bond down to 2.75%. U.S. dollar index at 81.01, up 21 ticks on the day. So the market is higher despite a stronger dollar today. Gold for December delivery rose $4.90, settles at $1,730.90 an ounce. For the week, gold gained 3.3%. Check in on the GLD, see how this ETF is doing. GLD still looking at potential resistance here at its 50-day moving average. GLD down 25 cents to 167.74. And crude oil today, December crude oil rose 98 cents, 1.2% gain to settle at 86.07 at the New York Merc. Oil prices up 1.4% for the week. Yeah, if you're looking for yield in a market that's under distribution, I think maybe Monday, Tuesday next week, and over the weekend I'll do some research on some ETFs. ETFs are a great area in the market to get good yield. So we'll look forward to that next week. We'll be right back, folks.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Let's check on the markets here. Geez, I was going to check on the markets here. Give me a second. All right, Dow Jones kind of holding on to a small gain, up 8 points right now to 12,819. The S&P 500 up 4 points to 1381. NASDAQ Composite off its highs, still up close to 15 points to 2910. Tech stocks being propped up by Apple. Let's take a look at shares of Apple. Still trading in the top half of its range. You can see the stock has just been absolutely obliterated since hitting a high just over $700 a share back in September. Apple up 1.8% today to $547.32. Lots of institutional selling in this stock. You see the rally today not happening with much volume. Hard to make any bullish case for Apple at this point, just because it's up for one day after significant bouts of institutional selling. But tech stocks catching a little bit of a bid today, outperforming partly due to buyers in Apple. Wanted to take a look at some earnings report, considering earnings today, not that much in the way of earnings reports. Been pretty busy, but fairly quiet day today. FleetCor Technologies, interesting company in a niche market. They provide payment products and services to businesses, commercial fleets, oil companies, petroleum marketers, and the like. Very, very strong results from this company, and stock's having a decent day, but trading well off its highs, still up 3.9% to $47.92. It made 83 cents a share, up 48% from a year ago. That was 10 cents above the consensus estimate. Sales growth of 39%, also better than expected. Revenues totaled $186.9 million. That was almost $10 million above the consensus estimate. Now, the issue that you have with FleetCor here is that if you're buying up here, you're buying an extended stock, because the breakout for FleetCor happened back in early August when it cleared a swing point of 41.30. It gapped up. A lot of people afraid to buy, gaps up in price. In this case, it would have been perfectly fine. I can think of countless other examples where buying a gap up, if buying demand is strong enough, it sometimes is not a bad buying opportunity. This turned out to be the case with FleetCor. But again, after a breakout over 48, now trading, a breakout over 41, now trading around 48, this is an extended stock. So you don't want to chase it up here, even though the company reported outstanding earnings. Kind of an interesting earnings report from Jazz Pharmaceuticals. This is what I would consider a high-quality drug maker, kind of a wild day of trading for the stock, very volatile trading. I typically like to avoid stocks like this that can trade 10 to 15 points in an intraday range. I mean, it's just too volatile for my taste. But fundamentals pretty good at Jazz. Hit an intraday low today of 47.37. It is now trading at 52.81, down 44 cents on the trade on the day, trading up near its session high. But earnings were up 37% from a year ago to $1.29. 3 cents below the consensus estimate. Sales growth up 135% to $175.5 million. That was also below the consensus estimate, but it's kind of a strange report because the numbers that Jazz reported did not include results from its recently sold women's health unit, and even though it was still part of the company during the quarter. So if you included those results, you actually had pretty good numbers. So I think the market realized that, and it is now trading up near its session high, only down 44 cents to 52.81. Nordstrom, we've been talking about some of these department store operators. Yesterday it was Kohl's that warned of soft holiday sales. The day before it was Macy's. You didn't really get a holiday season warning from Nordstrom. I think the stock is just getting kind of pulled down by overall retail weakness, but stock right now down 1.1% to 54.80. Numbers were pretty good at Nordstrom. The only issue I saw was that they missed the consensus earnings estimate by a penny. Their sales were in line, same store sales up 10.7%. They narrowed their guidance for the current quarter. I think it was slightly above expectations. So overall, the results look just fine at Nordstrom. It is below its 50-day moving average here, still holding above its 200-day line. So out of all the department store operators, I mean, this one is not. I don't think it's in buying range here. This is one of many stocks that looks like it's ready to consolidate gains for a little while, kind of pause, take a breather. And but the number's pretty good at Nordstrom. The numbers were not good at JCPenney. JCPenney. It's just been a stock in trouble for quite some time. Ron Johnson left Apple. He ran the retail operations over at Apple. A lot of optimism that he was going to be able to turn JCPenney around. Well, apparently this the new low prices everyday pricing strategy for JCP is not going so well. They lost 93 cents a share. The estimate was for a loss of 7 cents. So, I mean, just a huge miss there. Sales were down 27% from a year ago to $2.93 billion. The estimate was for sales of $3.3 billion. So, just missed by hundreds of millions of dollars. Same-store sales, I mean, down 26.1%. Not sure I've ever seen a same-store sales decline of that magnitude. The estimate was for same-store sales to decline 17.9%. So the metrics were bad all the way around. Shares of JCPenney down 5% today to 2061. Has all the bad news been priced in? Perhaps. You can see that, you can look at its daily chart here, and JCPenney is starting to flirt with lows that the stock made back in mid-July. So I'm sure some technicians will say that this stock is, only a matter of time before it bottoms. But, I just never understand buying companies like this that are having so many problems executing. When I look at stocks for my Ultimate Growth Stocks model portfolio, I like to buy, stocks that are executing with good earnings and sales growth, high return on equity, profit margin at peak level, innovative products and services, great management. And I understand that you can make money in some of these cases where companies with terrible qualities, they bottom and all the bad news gets priced in. It's just not my style of investing. So JCPenney in a world of hurt today, but again, getting down to those support levels set back in July, some people maybe say that a lot of bad news has been priced in here. But this is going to be a question, how much longer is Ron Johnson going to be, given to turn this company around? There were many thought that they would have started seeing results by now, but that is certainly not the case. At one point, biotechs were outperforming nicely. Boy, have they been hit hard today. Let's take a look at the IBBs, the very liquid biotech ETF. It had corrected all the way down to its 200-day moving average, fell below it earlier today, but look at what it's doing. It's up near its session high, up 1.3% to 130.12. A little bit of volume behind the move. You can see these big red volume bars, though. A lot of heavy volume selling in the IBB, starting to rally back today, so a decent performance. And all the biotech charts that I'm going to look at right now look exactly like this IBB chart. We'll start by looking at shares of Biogen. See a steep sell-off in shares of Biogen. It is rallying back today above its 200-day moving average, up 1.8% to 138. Former leader Alexion Pharmaceuticals, same type of chart. Nasty sell-off, working on 2 straight days of gains, up 2.4% today to 90.82. And then a former holding in my Ultimate Growth Stocks model portfolio, Regeneron Pharmaceuticals. This is a stock that I possibly will revisit in the future, but the question is it going to be able to form a proper base? What does forming a proper base mean? Well, when a stock runs up like Regeneron did from July when it was trading around 115 and it ran up to 165, stocks always take a breather. They always pause and consolidate gains, and that's what Regeneron is doing. Some are going to continue lower. Others are going to put a bottom in, and then institutions are going to start nibbling again, and these stocks are going to start forming the right side of their base, and they're going to start to retest their former highs. So if Regeneron does that, from 141, it should eventually start to retest its high of around 165, and that's what building the right side of the base is. When the right side of the base is built, if there's heavy volume behind the price gains, that's a sign of mild institutional buying that strengthens the quality of the base. And then if you're in an uptrend or you get a buy signal in the market, a lot of these stocks that built the right side of their bases eventually break out to new highs, and they become the next market leaders. Now, I don't know if Regeneron's going to do that. I know there's a very good growth story going on at Regeneron, but we'll have to see. That's the issue with the market right now. There's a lot of base building going on. It's impossible to say what stocks are going to carry the leadership baton going forward. First thing we need to do is we need to see a sign of strength in the major averages. If we get that, that's when you want to look at, take a look at your stock screens, look at the strongest performing stocks. I can say with virtual certainty that when we do get a buy signal from the market, hopefully it's a buy signal with conviction. The stocks that have the best chance of outperforming are those that are going to be closer to new high ground as opposed to those stocks that are 40, 50, 60% off highs. We just looked at J.C. Penney. A company that's having terrible problems executing. Not likely it's going to be a market leader because of all the heavy volume selling the stock has gone through in recent months. Some other names moving today after recent weakness. Let's take a look at shares of MasterCard. MasterCard hanging in there pretty good, I got to say. It's firming up at its 50-day moving average again. Not that far from its 52-week high at all. In fact, it's, let's see here. MasterCard, it's only got to be a few percentage points from its high, about 4.5% from its 52-week high, but a stock that technically still looks okay in this market. The issue with MasterCard, though, is you do have a late-stage base. If you go back on a weekly chart for MasterCard, you are going to see a series of bases. It's been a big bull market leader over the past 3.5 years or so. And we talked about Whole Foods being another late-stage base. So you want to be wary of late-stage bases. They've just made huge price moves already. So even though MasterCard is still hanging in there, fundamentals are solid, growth prospects are pretty good, it has made a big price run already. Another name I like here, United Rentals. They are a provider of construction and industrial equipment rental services, and stock that was under a lot of selling pressure Wednesday and Thursday. It's bouncing back today, up 93 cents off its high to 39.80, still holding above support here. I think this one still has the potential to work. I just owning growth stocks in general in this type of market environment, I think the risk for losing money in growth stocks outweighs the possibility of making money. And that's not really a general statement either. I mean, higher multiple stocks, even companies with great products and services like United Rentals with good earnings and sales growth, they're just vulnerable in a market that is under distribution. Mentioned Whole Foods market. Whole Foods, they came out with earnings yesterday, just a very mediocre quarter at best. The stock really got taken apart. Came down to its 200-day moving average, close to its 200-day line yesterday. It broke below it slightly today, but it is back up near its high, up 1.5% on the day to 91.69. So there are some buyers coming in there and offering support. But again, on Wednesday and Thursday, you had big sellers in the stock today and pretty light volume in the stock. So not much conviction behind the buying Whole Foods. Still looks technically damaged. To me, is going to need more time to repair itself technically. Michael Kors reports earnings November 13th. That is next week on Tuesday, as a matter of fact. Expecting very strong numbers from this company, but again, a growth stock that looks like it's in a little bit of trouble here. Big move below the 50-day moving average yesterday. Tried to rally back a little bit today, but only up 5 cents now to $50.75. Earnings at Kors next week expected to be up 74% from a year ago to 40 cents a share. Sales up 70% to $519.3 million. This is a company each quarter you tend to see same-store sales growth of like 25, 30, 35%. So Kors, one of these companies still, I think, arguably in the early stages of growth, but a weak market tends to bring every last stock down with it, and I think that's what's going on with Kors here. Yeah, fundamentals are fine. I don't think the recent selling is because fundamentals at the company are deteriorating, but still, high multiple stock like this, you want to get out of the market's way. You don't want to, flirt with the possibility of watching a small loss in a stock spiral out of control. So Kors has potential, but not a stock I'm interested in owning when the market is in a downtrend like it is. All right, coming up on our final break of the day, TGIF for everyone. Hope you got great weekend plans. Another weekend of sports for me, maybe a little golf, some baseball, softball with my kids. It's all good. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing on TFNN. 5 minutes left to go in Thursday's session. Wanted to check in on the markets before we put the finishing touches on today's program. We're trading in the bottom half of the ranges for most indices. The Dow right now holding on to an 8-point gain at 12,819. NASDAQ well off its high, up 13 points now, 0.5% to 2908. S&P 500 up close to 4 points to 1381. Another growth name outperforming today that still think has potential is Neustar. NSR is the ticker there. Neustar is an interesting company. It's started work on the right side of a base. They provide call routing, database, infrastructure services for telecom and enterprise markets. And I wanted to show you just a weekly chart for Neustar because this is exactly the type of chart action you want to be looking at here. Actually, where is Neustar? Neustar, there it is. So what you have here is a stock that has been consolidating gains for almost 5 weeks. Look at its 40-week moving average here. See, the stock corrected for 4 weeks, came down to its 40-week moving average, found support. Now it has started work on the right side of a base. So the question is, will it eventually retest its prior high right around 41? If we do start a market uptrend at some point between now and the end of the year, this is a name you want to keep an eye on because it could start to it could continue to form the right side of its base here, get back above its 10-week moving average. That could be resistance for now, but if institutions start coming in and nibbling at this name, you can't rule out an upside breakout for Neustar. So it has the potential to be a leader because, again, this is a company still, to me, looks like it's in the early stages of growth. Market cap of about $2.5 billion. Excellent top line growth in recent quarters. Bottom line growth as well. So it's really about which stocks are going to successfully build the right sides of their bases, and which stocks are going to successfully break out in the future. Next week, pretty quiet, not so quiet in terms of economic data. We've got a bunch of retail earnings, like I said, but we've also got retail sales for October. That's going to be out Wednesday. And then we've got inflation data, producer price index on Wednesday. We've got the minutes from the October 24th Fed meeting also coming out Wednesday. So Wednesday looks to be a pretty busy day. Thursday, weekly jobless claims, the consumer price index, and a couple of key pieces of manufacturing data, Empire Manufacturing and Philadelphia Fed. In terms of earnings reports next week, it's all about retail. Let's check in on Williams-Sonoma. Retailer still hanging in there, kind of flirting with a break below its 50-day moving average here, but still holding above the line, has been an excellent price performer. High return on equity at this company, 19%, is indicative of a pretty good management team. Williams-Sonoma reports earnings on Wednesday, so we'll see what that company has to say. Also on Thursday, how about Ross Stores and TJX? They're coming out with earnings next week, and boy, have these stocks absolutely been taken apart. Unbelievable, when these stocks that have been just running higher for seemingly forever, when they break down, they really break down. This was a stock in mid-August that was trading around $70 a share. Now it's around $55 a share. So not a disastrous decline, but still a lot of institutional selling in this stock. So Ross Stores on Thursday. We've also got Target, Walmart on Tuesday as well. Coming up next, the Tom O'Brien Show. Hope you have a great weekend, folks. I'll be back Monday with my own show, Breakout Investing, 3 o'clock Eastern. I'll talk to you then. Take care.